Hello. Hey, Ariana. I think I'm live. I think I'm already live, so I think I figured it out. Yeah, you want to check me on and see if I'm there? I'm talking to you live, actually. All right, thanks. Bye. Thank you. Hi, everyone. Sorry, had a little hiccup last time, so wanted to make sure this was set up right. So I was calling Sean Thomas's help Ariana, but we're here live. So hi, Nick. Everyone, welcome. Thanks. So Jeff Bruno, your outsourced CFO, based in Philadelphia. This is my second mentor session. The first one was unfortunately not live, but this one is. So looking forward to see if I can answer some of these questions in this crazy time. As I'm sure other mentors have been saying, yeah, we're dealing with something unprecedented here. It is affecting all of our clients in different ways, and I can get into that a little bit. I think it's telling of the fortitude of the small business space and what this economy has really become. If we could all get through this, so I'll dive into that a little bit. I think some of the questions speak to that, so I want to just get moving with it. And certainly I see the comments. So if anybody has comments along the way, I'm happy to jump in and discuss some of that as well. So thanks for coming on board today, because I know everybody is busy, I'm sure. So first question, just to jump right in, Elise Cotton. She asked, is it better to be completely transparent, open with your team/employees on company-generated revenues? If it is good to share revenue information, are you openly sharing expenses as well? Or is it best to leave the team out of that conversation entirely? And her second question is, what are some of your best practices for motivating employees? Are having constant spiffs in place that moves the needle? Or what moves the needle? Or quarterly or annual bonuses the best motivators? And she said specifically for electricians. So across the board, it does vary by industry. But so speaking about whether it's good to be transparent, I'm a big believer in transparency. You got to be careful what you're doing. You don't want to, give away everything and have people feel bad or misaligned with the goals. Depends on what your people are doing, I think. So if they're strictly revenue generating, so if you have a company where your people are direct, they're doing their software development, their billable time, and engineering, maybe even electricians a little bit. So they're direct employees. So their time is managed to your profitability. So if that is a concern, or if that is the way your business is set up, I would recommend bringing them in at least to the revenue conversation, because what they do and how they generate the revenue is certainly going to have your business reach the levels of targets and the profitability that you're looking for. So I do think that's a good idea, and it ties into the goals. We want to do $1 million, $2 million in revenue. We have 20 people. They're each going to do $100,000 in revenue this year. It sets up sort of goals for the direct team that they should hit. I think it will help everybody else support each other in hitting those goals as well. I think the expense side's a little different. I'm a big believer in gross profit or gross margin being a discussion point. So you have your revenue, you have all your either direct labor or direct materials, and then you get to your gross profit scenario. That should be as transparent as possible, because that can be affected by your team and what they're doing. The fixed expenses, maybe the owner's salary, the rent, the whatever, that is with the management to run with, and should be managed that way, and not necessarily needs to be transparent. So that's kind of how I separate it when I'm involving the employees in the business. They will tend to like that and try to perform up to those numbers. So for motivating employees, along the similar lines there, it's setting goals. It's setting realistic goals. You don't want to set goals that are crazy or out of line and they can never hit them on a quarterly basis. I don't recommend annual bonuses unless your company's structured that way, because, like a finance company, for the whole year, you have to hit certain targets to be able to have that available profit. But if you have sort of a monthly trending scenario, or monthly up and down, quarterly tends to be the best to keep people motivated. So I recommend quarterly bonus structures or commissions or whatever it may be you're doing. Spiffs are great. Project spiffs, one-time spiffs, spiff on high margin things, because you want more of the high margin. Those are always great. And in particular with electricians, you mentioned. So because they, electricians, to have efficient work and speed on the job, you don't want to do efficient, meaning good work. You don't want to do bad work and do it fast, because then you have to come back and fix it. And that's very costly for the business. But you also want to do it, with the best materials, the most least costly materials that work well, and try to get the job done timely. Giving spiffs for certain things like that could help as well. Hope that was helpful, at least. So let's go to the next question. We have Kimberly Vincent. She asked, I have an opportunity to begin collaborating with a corporate wellness company from Nova Scotia. They focus on ergonomics, nutrition, mental health, and want to add the massage therapy component. So I'm assuming you do the massage. That's great. We, Pam, the owner, and I have very like mindsets and visions. In a video call we had last week, she explained her vision of us eventually joining our companies together, growing, and finally exiting. I've heard Sean Thomas talk a lot about hinging your success to other people or companies. I also know there's strength in numbers. That said, I'm not ready to go jumping into a marriage with her just yet. One step at a time. I'm excited about the opportunity to grow my company, but I'm not naive to the challenges of partnering businesses. I'm interested in your thoughts, comments, experience, or recommendations you might be able to incite me with while I consider this. Thanks, Tribe. And her company is called Dempster Wellness. No, that's a neat name. Kimberly, yes. So partnership. Partnership is one of the hardest things in business. I'm sure you've heard this before from other mentors, other people, so on and so forth. It definitely is. I would say that one of three major things in businesses that cause disruption of the businesses we're dealing with is partnerships. And I don't mean just because they're fighting. I mean because there are other factors that come into play with a partnership. And I'll give you a couple examples. So one partner might be well off. One partner might not be. And so there's an immediate scenario there where there's a bad connection. Like the one partner might say, I'll put my salary back in for 6 months to help the business through a rough spot. And the other partner would say, I can't do it. And then automatically you're having a battle there on what is the best scenario, and do we need to adjust equity and so on. It gets very tricky. So that's one issue that partners face a lot. The other is, are they both operating partners? Are they both silent partners? What are they bringing to the table? And a lot of things people miss in a partnership is doing a buy-sell agreement at the very beginning, or a very detailed operating agreement. So should the partnership, go south, there's prescribed outs or exits for people. Many people don't do it. And I understand it. I mean, you're excited. It's great. I'm bringing massage to this, and she's got the ergonomics, nutrition. This is a perfect match. We'll do fine. And that happens all the time, as we all know. But even just a baseline valuation in a buy-sell agreement helps the scenario. And one other thing I recommend big. We're going to talk about this in the next question, so hold on 1 minute. But one of the other things to think about here is what is the value you will create together? And is there a way that value can be clearly defined on either side? So is massage more margin? Is nutrition better off? Is there more cost in the nutrition side because you have to house the materials and in inventory, and there's more risk there? I don't know. I mean, so many different questions. A lot of things should be reviewed. But I do like the idea of growing with services that can help each other and feed each other. That's a great idea for synergy. So I think you should certainly look at it and look at pursuing it. But I hope that helped. Those are my comments there. So the next question, along the similar lines here about sort of buying a business, buying or partnering. Jonathan Befort, his question was, my partner Mike and I have a very small commercial cleaning business. We both still have full-time jobs, so we don't have a lot of time to work on growing and running the business. Careful, that's hard. I get it, very difficult. We came across a medium-sized commercial cleaning company that is up for sale. It seems solid, and the projected cash flow would be enough to pay the bank loan every month and provide us with both modest salaries. We know nothing about buying a business, and we don't know what we don't know. So what are the pros and cons of buying a business? Are there any major things we should look out for or consider when purchasing a business? Yes, there are tons of things when purchasing a business. There's I obviously can't get into all of them. There's major due diligence things we do with clients. Sort of extends our engagement a little bit, but if a client's looking at buying a business or selling their own business, we jump into a lot of different pros and cons and scenario planning for that. But just to touch on some of the pros here, as you mentioned, I mean, increased cash flow and profits, ideally. And when you deal with that, one thing to look at here, which a lot of people miss, this is pretty important, is contribution margin. I don't want to get in the weeds on this too much, but when you're buying a business, you really have to look at what is the contribution margin, which is really just taking your revenues and all your variable expenses. Now, when I say variable expenses, I mean expenses that are truly variable to revenue, for the most part, variable to revenue. Subtract that, you get your contribution margin. So what that means is basically the dollars you have available to fund your fixed expenses. The reason I bring that up is when you're buying a business, you're going from one owner or two partners per se in the original business to 3 or 4 or 5, who knows, whatever it may be. You're going to a lot more personalities, a lot more scenarios, probably some decent increase in fixed costs. And you need to make sure everybody's comfortable. So you might have different lifestyle scenarios, like I mentioned earlier, and you need to make sure that 3 partners or 4 partners can be covered in a salary standpoint. And that salary of the partners is really a non-direct piece, so it needs to be looked at from the contribution margin of the business. You probably need to take on more debt, even though the cash flow right now looks like you might be able to cover it. There's probably more debt, at least to get some of the efficiencies you're looking for as well. When you first merge the 2 companies, you'll have unexpected costs that come with integration of the companies. So always be very conservative there in doing that. But you get the same thing that everybody does in the business world. When you grow and scale, you get scale. I mean, you get buying power, you get cheaper products because of that. You get ability to take discounts, to pay early because you have better cash flow. I mean, in theory, your gross profit should improve in those scenarios. So I love it. Of course, we're a big fan of especially businesses that can support each other in growth. And stability. That's another thing. The bigger you are, in theory, the bigger you are, the bigger you can fall. But in theory, if you're bigger, you have more stability. You have more sort of cash flow reserves. Should there be a downturn like today, where you need to plan on a month, 2 months, 3 months, because it's an unknown. So you have to be able to stay ahead of that. And the bigger the business, the better chance you probably have of getting through that, as long as you're not growing too fast. That's something you got to be careful about. but that's a later discussion as well. So those are some of the pros, excuse me. Some of the cons, it's hard to evaluate price. So somebody might be selling a business and you're just not sure if the price is right. Maybe the seller really says it's valued here. So what we like to say is accounting firms will do this. We kind of do it. We don't do it officially, but we do it as part of our due diligence. We manage it where we do a quality of earnings. So we'll look back at the revenues, make sure they're all in accrual, not just cash, to see the cycles of the business, see if the earnings are real, if they didn't pad some of it at some times, and then make sure it aligns with tax returns to the best that it can to see that those earnings are right. It's really good to do that, to make sure that you don't step into something where the owner is, kind of maybe at high growth and has plugged some extra revenues in here, but they're really low profit revenues, and you're jumping into something that's not that additive to your business. So you got to be very careful about those earnings. You could come into a situation. One of our clients, unfortunately, actually bought a bigger business, and the bigger business gave us projections that we looked at about adding more, about projections of certain revenue streams that they felt they were really sure on. Their CFO was talking to us about it and everything, and they assured us those revenues were correct. Well, my client really wanted to move fast. It moved too fast, unfortunately, because 70% of those revenues were false of some of these projected revenues. So verifying not only historical, but really what the projections are realistic that the selling business might be offering to you is really important. The other cons are sometimes with the big, two businesses, you can grow too fast. You get in there, you're undercapitalized, you think this is going to be great. Now you've taken on debt, and then you're like, wait a second, I don't have enough working capital. I really need to hire these more people to handle this influx, or I'm low in this level of inventory to support the growth. A lot of factors here in buying a business. So, a lot of things to think about. So that's pretty much it on buying businesses for now. And one more quick thing. So one more thing that's also important. There should always be a boss. I think a lot of people don't like that. But if you guys agree on a business construct, if you don't have a buy-sell, or let's say you have a buy-sell even, or an operating agreement, there should always be a 51-49 relationship, if possible. I highly recommend that, because there needs to be a boss. Somebody has to be driving the decision in a business. Otherwise, you can get really stymied, and it could cause a lot of problems. It's hard to get people to do that sometimes. Thank you, Ari. Yes, exactly, Ari. Ari mentions relying on the seller's information. Yeah, it happens a lot. We as humans, we trust the information that's sitting in front of us, like all this stuff we see online these days, the news and so on. We've got to be very careful with that. It's not that they're trying to be fraudulent. It's that they just might be very optimistic, and that's not really the case. That's why it needs to be reviewed and tested and looked at historicals for trends and all that. Very, very important. So Ari's got a good point there. So now we have another question. David Fitzmaurice. Yes. Hey, how do you think the virus will affect the world and the economy in the next few months? And are you planning differently ahead because of it? The big question. Yes. Yes, it will definitely affect the world economy. I think we're going to have a downturn. How bad it is, I don't know. Like a business, I think the countries are kind of similar to businesses in certain ways. The weaker countries are going to have some more problems than the more well-off countries. I think the U.S. is going to do okay in this. I think 60% of the business in the U.S. is driven by consumers, 60-70% by consumer buying. And for consumers to buy, there has to be businesses open and things going on. This is going to be a big hit. It's going to hit GDP. It's going to hit earnings. I hope the professionals are smart about this and they're adjusting correctly. So they take into account the COVID virus, which I'm sure they will. And I think, I still think, I mean, I read this all the time. I'm a big CNBC believer and watcher. I do believe the U.S. is very strong. Our fundamentals are still very strong, unemployment being very low. I think we will come out of this pretty strong. I think it's going to be a 3-month heavy disruption and a 6-month until we're back to some sort of relative normalcy and growth. So what are we doing? We're thinking 6 months. We're looking at 6 months with our clients. So we're trying to stabilize them now with cash flow. We are having them cut down on non-essential things more than they would like to. We're cutting back salaries and distributions consistently for owners. We're asking them to do that if they can. Most are, so that they could ride through a rough patch. We are cutting back on AP payments and pushing out things just to conserve cash so we can be nimble and flexible. So when things ebb and flow, we'll be able to keep things going, keep the essential going, and so on. We're furloughing some employees, telling people to furlough some employees, throw them on unemployment. Tell them, look, guys, business has dried up. We're going to do this for a month, and then we're going to reevaluate. If you have some profits, some cash in your business, and some of your key employees you want to keep going with, I'd suggest, maybe 2 weeks to a month, and then give them, hey, guys, we can do this as long as we can. But we have to, for a business to stay alive and for all the employees to be able to be paid, we need to make profit and we need to be alive as a business. I think some of the weak ones are going to be gone. A couple businesses of ours, our clients are close to that. They probably won't make it. So the U.S. is throwing a lot of liquidity as well into the markets. They're doing it every day. They're announcing things. The Fed's throwing liquidity in. They're trying to get the banks to lend. Banks are going to be a little cautious here. They're going to be careful, as banks are. Look at alternative lenders, not the predatory kind, but look at your CDFIs, your community development financial institutions, CDFIs. There's a lot of them in various towns. I know in my area, Philadelphia, there's PIDC and Finenta and a lot of others. Those will typically go out of their way to help small businesses. And look at your local CDFI. It's a big one. They'll be quick to loans. They usually do anywhere from like 10,000 to maybe 750,000 in loan structures, 5, 7, 10 years out to help you get through this. So there's a lot of things out there, and just conserve cash right now. But I think we are going to see a rebound. This is not going to be a 2-year downturn, in my opinion. Next submitter is Max Condrith. So Max asked, I'll keep this long story short for now. Max, this is a tricky one. I read through this quickly. Our brand sells high-quality yoga mats via e-commerce. We are looking for the best low-cost shipping option. I'm familiar with different 3PL options, but strictly trying to focus on the shipping cost itself. Our package is around 26 by 6 by 6 and 5 pounds. FedEx is charging $24 for shipping in the U.S., which kills our margins. USPS and UPS are a bit cheaper, but still around $15 and $20. Any brand recommendations for discounted shipping options? We were originally selling through Amazon with their extreme shipping discounts, and we don't get those anymore. Yeah, Max, that's tough. Amazon Prime actually has a great new service, and I know you're not shipping through Amazon anymore, but they had a great new service where they did a significant shipping discount with that. As a business on Prime, we have a couple businesses who use Amazon, e-commerce businesses, and the only problem with Amazon, as you probably know, they charge 15% for you to store and ship through them. So that could erase some of your profit that you're looking for here. Shipping is is the new norm here in the US. So the good thing is I think there's competition here. I think it's going to continue to be competition as Amazon grows and all these others grow, but there's not a lot that I know of outside of this. It's not really my specialty. I know that some of our clients have shipped to different fulfillment centers. We have a furniture e-commerce seller, a dog products e-commerce seller, and patio furniture e-commerce. And they'll ship to different fulfillment centers across the United States in larger pallets. So I don't know if you have enough you could ship in pallets, but way down on cost in the pallets. And then they get significantly discounted because they're only shipping a couple states away from that. But then you have to inventory and so on, kind of like the Amazon model. So not too sure on specific other options for you. Sorry, I didn't have more info there. So before we go to the next question, another thing from Ari here, Brown. I went to talk to my bank yesterday, and they said they'll be extending more personal lines to help. U.S. Bank is your bank. I think that's a Midwest bank, right? Or they're all over the place now, U.S. Bank. Yeah, they are going to be doing personal lines. Yeah, there's tons of this stuff coming out. A lot of SBA-backed stuff. Which is fine. That's usually what the personal line is gonna do as well. It's gonna be SBA backed, meaning they lien your house, all your business assets, and so on, which is fine. I mean, if you're in a sticky situation, you'll take what you can get. The key to that is planning, Ari. Make sure you plan. I mean, you don't want to take a loan on that 3 to 6 months from now. You can't start paying. You need to make sure and feel comfortable with that projection. But let's go to the next question. So Max, we just talked about Max, sorry. Patricia Burgess. Patricia says, I'm thinking about adding a vertical in our service for virtual supply chain consulting, much like the online physician consultations, except in my niche. What do you think the pricing structure should be in comparison to on-site consulting? The per hour rate or subscription fee for access to the expert network? Thank you for your time. Well, I don't know enough about your business, Patricia, to be honest. I mean, there are so many hourly services out there. Thumbtack, I don't know if you've heard of that one. It's pretty cool. But there are so many hourly services that people charge as consultants these days, or individuals as freelance, which is great. But it's across the board. I mean, you could get 30 an hour to 80 an hour for the same job. So it really depends on your industry a little bit, on what your levels are you can charge. I would argue that you need to be competitive. You need to be lower in cost than some of the bigger firms, because the overhead function, you don't have it in theory. So you could be still maintain the same margin or greater with some lower cost structures on the hourly, ideally. And I love your idea about subscription. I think subscription is a great way to go, because one of the things people hate these days, as they always have, is they hate feeling like they're being charged for every minute they're on the phone, or whatever they may be doing. People just, that's just, our business is retainer based as well, our firm. So people just don't like that. And so they hesitate to call or do work or get back to you. So I love the subscription model. I mean, subscription, monthly retainer, those types of models are very, very well. It just takes a lot of management to doing that, making sure that you have the content updated real time, and making sure that you're hitting enough of the market with what you're offering out there. But I'm a big fan of that. So if there's a way you can figure out subscription, or maybe make subscription 30 to 50% of your scenario to stabilize your income and cover your fixed costs, that's a big thing. Maybe you can even get it to cover your fixed costs, and then move on from there on the hourly piece, because that's going to be a variable component that you're just unsure of. So hopefully that helps. So next question, David Fitzmaurice. Hi, I need help with pricing jobs and getting my prices right. With houses all different shapes and sizes and areas larger and smaller, is there a way I can price jobs consistently and correctly? So I'm not sure, David, what you do. It'd be a little good if I had some context there, but I'm assuming you're doing something with homes, maybe installation of something in houses. So maybe it's I don't know, electric work, carpets, wood, painting. I don't know. But so I mean, so I need a little more context here, but I would think that doing it by square foot or by sections, depending on what you're doing, could also help because you're dealing with a lot of different sizes. Maybe as they get to a certain point, your material cost can be pushed out over a larger area if you're doing, over a certain level of a house. So you'll get some discounts there, or you'll get some advantages, and maybe you can then lower the cost as you get a larger job a little bit to take some of the sting out of that, which is like sort of anything. As you get bigger, you get some efficiencies there. But I'm just not sure. I mean, maybe not on the labor side, but you would on the material side. So I just need to know more of what you're trying to do. But by square foot is a good way to do it, or by area. I would say, if that helps. Now, before the next question here, all right, very active over here. I love it. Okay, I just asked for my clients, since I'm getting a lot of questions, especially on the SB loans. I'm not looking. Especially on the SB loans, I'm not looking. I'm not sure what you're saying there, but the SBA loans are not out yet. The information's not available yet. Next question, Tim Schiffer. I've been in the consideration phase of hiring a firm to help drive traffic to my e-commerce site for a while now. Oh, interesting. In the past couple months, I've grown more serious about the idea, culminating in the interview of 3 separate agencies, the third of which was interviewed last week. I like the third company a lot, and I'm meeting with them next week again. The challenge: my business does not generate enough revenue to fund the hiring an agency. The hiring an agency. So I plan to pull funds from investments to pay for the runway time I think is needed to get this effort off the ground. That is until the market crashed and until COVID became a reality. This has me wondering what to do, and my first thought is to hold on hiring an agency while the market recovers and continue scratching and clawing my way forward. It's progress, just slower. Is there another option, a better option? Aside from just accepting the fact that I'm selling low, and I should have accounted for that possibility when I put money in the market to begin with, I'm not a millionaire here or even a guy that's built his first business. So I'd be very grateful for any experience advice. So yeah, Tim, great question. So it's the hardest decision to do. And this is where financial planning for your business and modeling out projections is absolutely critical. I mean, that's the biggest thing. Unless you have certainty on what you're doing with these dollars and, putting sensitivity analysis one way or the other, up, down, too much growth can also be a factor. Then you might need more money to invest, or, you're 30% under your projections. What do I do now? I need capital to keep moving. I think those are really, really important to looking at anything. You can usually find financial help at that. Accountants, maybe. We do it all day, but we're an ongoing service. I mean, I think it's really about getting clarity around the financials and what it means for you. So I am not against taking money out of investments. I'm sorry you lost some recently, but I'm not against taking out of investments if to use for marketing. As long as you're sure you're staying on top of that and really, really tracking those marketing efforts. You need the key metrics. Are you doing SEM? Are you doing SEO, which is organic? SEM is pay-per-click. SEO is organic. Are you doing? Who's developing the content? Be careful there, because sometimes these agencies say, well, we'll do all this, but we can't get too much of the content in. It's too expensive for us. And they'll say it's another $2,000 or $3,000 a month to do that. You got to be very careful. One, you have enough content. Two, you have something that you have the time to evaluate this. I've never seen marketing work, and that's not true, not never. There's been some crazy hot products that explode, but marketing takes time. It takes time to get out there. Google takes time to adjust to your content. I mean, all of our clients, 3 to 6 months to get marketing out there. So that said, this could be one of your better times. I mean, all of us right now are sitting here on our computers or on our phones or watching, I don't know, crazy stuff. So if you're trying to get known in the marketplace, this might be a good time to do it. You just got to be careful of your monies and make sure you don't run out before you get to the revenues, because they could be even further delayed due to the situation out there. But I'm a big proponent of it. I think doing marketing, even with an agency that's good, is the way to get your name out there and get moving. But if you're not well capitalized and can take a downturn, a further downturn, I'd be a little bit careful with that. Sorry if I didn't give you a precise answer there, but projections are the key to make the decision point. So next question. Let's see. We got Lindsay Lannon. Hey, wanted to ask if you thought it would be best to wait on trying to introduce my cake bombs to my audience, farmers, markets, events, etc. That sounds cool. Whatever cake bomb is, I want to see it. Given the circumstances, I feel people are very cautious about what they buy or eat. Given that, would it still be okay to post on Support Saturday, inquiring as to who would like to receive an order for research purposes? I was thinking of asking anyways, but holding out on actually sending anything till it calms down. Thank you. Well, you clearly have to wait till it calms down. You have no choice there. I mean, food is closed down right now. We had a large company, $15 million company. They are completely closed down, and they're even considering reopening not until July or August because all their orders for the next month have been closed. We're doing some emergency planning with them to look at what that means, how they, how much cash do they have, and they do have a lot of cash. They've been a very successful business, so they'll probably ride through the storm. But I mean, getting things going through food right now is tricky. But I don't know, your cake bombs, I don't know what that is, but that sounds pretty cool. I mean, I certainly think once this settles down in about a month, having a test run is definitely open. You should do that for research purposes. I mean, yeah, give it a shot. I mean, you never know. There's a lot of new developing food businesses out there. People are into very, very different things and are always open to trying stuff. So I'm a big proponent, but don't get too big too fast with food. It's very disposable. You can get over your head. You inventory too much stuff, and you got to be very careful with that. You got to make sure you have enough margin. That's all. I hope that was helpful. And I think this might be our last question. Happy to open up one more question after, and then I'm happy to open up to the audience here who's on for any questions. So if you have any, think of them as I'm going through this last question. And happy to respond to comments if needed in this trying time, I'll tell you. Marielisa Marquez. I got into a big disagreement with my husband/partner. We own a hair and body care line. Due to the emergency of the coronavirus, we closed our store. Oh, sorry to hear that. The problem is that he thinks we should close all operations, even online sales, because of the exposure we will still have with the truck drivers. And he is right in that perspective. But sales are up. I think this is an opportunity. We could keep selling our products from our house. He says, I'm greedy and do not care of our safety and health. I know this is a risk. I think there are safety ways to deliver the packages to the drivers. This has brought up a lot of problems as a couple. Oh, geez. I don't know how to handle this situation. I really want to keep selling. Oh, boy. That's a tricky one. Couple, you own your business and sales are going well, but this has disrupted you. I'm sorry. That's tough. Well, your husband's not wrong. There is safety of the drivers. And of course, I would feel the same. And I think that, people are looking for ways to, do things, take care of themselves at home. So I'm sure your products are sought after. I almost feel like it's hard to decide what to do there. I don't think you can, depending on your product line and how many customers you have or what this is. I think everyone would understand if you said there's a couple week hiatus and, we want to make sure our drivers are safe and we can get this product to you without any issue and so on and so forth. I would just maybe put that out there and see what your response is from people. And, maybe take some pre-orders and say, hey, guys, we'll if you want now, we're being safe, but in 2, 3, 4 weeks from now, we're gonna ramp back up and send out to you. We'll take some pre-orders in now, and we'll even because of this scenario, we're taking 10% off the price. Happy. I mean, I think that accomplishes everything you're looking for. Your husband is worried about it, which he's right. It's you got to be cautious out there. You could still have orders coming in. You have time to fulfill them. You get a nice cash uptick. You can keep your business going. So there are ways around this. Depends on your customer base and how willing they are to wait, and ultimately what that is. Hope that was helpful. We've gone through a lot today. It's good. I understand these times. Thank you for some of your questions over here. On the side from some people. I think that just to reiterate, cash, guys, everybody, cash, please conserve cash, do what you can. That's what everybody's doing. Even the big businesses, some of them are. This will come back like everything else has. I'm sure you hear that from other people, but it will. I am a huge believer in that. I do this. We're too strong of a world, too strong of a country. This is a blip. It's an unfortunate scenario. I'm still very hopeful. Happy to see if we could do something again here soon. I think that's it for today. I don't see any more questions. So happy to reach out. I'll be at home for at least a few weeks here. So a couple weeks. So happy to answer some more questions from everybody, and hope this was helpful. And be safe, please. Thank you. Take care.